one of the most important innovations in the history of organizations has been the formation of the joint stock company. Now, it's important for every manager to understand that what is a joint stock company if he is working in one, and therefore what is the way the organization is designed, the way the concepts are designed, and therefore be able to work more creatively and productively in his particular role. Now, classically, if you see organizations, the way it evolves is that there is an entrepreneur. Over years, it has been the same, who has an idea. Now, he goes and he proves his particular idea, and then after that, he looks for growth opportunities, so he needs more funds, and then he runs operations, and after that, once his operations are done to a significant extent, then there is a scale up, and if the concept is good and the idea is good, then it leads to a sustainable organization. We have witnessed companies which are over 100 years old and has seen and has sustained for many transitions. Some quite a lot of them which haven't also. So few of the important things here is, one is of course the person, the entrepreneur, what the idea is, the source of funds, and the scale up. Now we try to understand all this in order to make it feasible for such kind of ideas to take shape and build large organizations. It's important to understand the concept of the joint stock company, which is, I believe, a very innovative design and perhaps one of the world's greatest innovation. Now, if you look at this aspect closely, now there are providers of funds, and then there are people who are running operations or managing the organization. Now, the joint stock company by its design separates the two. So providers of funds are the ones who we call as shareholders, and the people who are running the organization are the managers or the classical organizational pyramid and all the people in it. Now, what is the shareholder therefore by design interested in? He is interested in returns and the growth. And it's important for every member in the organization to understand that the shareholders, who are also the owners of the company, are able to get the desired returns. So therefore, somewhere all the complete management and the executive team of the organization must understand that they have to generate adequate returns. Now, these returns can be in the form of profits, or it can be form of a growing organization. It can be in the form of a great concept which is giving rise to increased share value. So this understanding is very critical, because at the same time the joint stock company by design does not let the owners directly interfere in the management of the organization. Why? Because it's important that the managers take their own decisions and run the company without being accountable for owners for every decision that they make. However, at the end of the year, when the managers or every quarter or end of the year, what the managers do to communicate with the owners is to churn out something called annual reports or provisional statements, and that shows through the balance sheet or through the profit and loss or through the cash flow. They are showing to the owners the health of the organization, which in turn, if the owners like it, and if the whole market likes it as such, the share prices go up, and therefore it becomes easier for the organization to raise more funds through means of equity, which is the cheapest possible source of raising funds for an organization. Now, once this is there, so the other side of the story is that therefore how do the owners, the shareholders, get an insight into what's happening in an organization? So the way we look at it is that there are shareholders of an organization. Who are the owners? The shareholders appoint a board of directors, and the board of directors appoint a managing director. The managing directors then, along with the board, appoints a CEO, and under the CEO is the organization structure. Now, one of the fundamental points to note is that while the organization structure below the CEO is a pyramid in nature, in shape, the organization structure till the MD is actually an inverted pyramid. There are many shareholders. So if you see that conceptually, the organization structure from the ownership side of the story versus running the organization is a fundamentally mirror image of each other. Now, where do the problems come? Now, ideally, the way the concept is designed, there should not be any issues which come up in running of an organization, because the CEO reports to the board, and for day-to-day operations, the CEO is working closely with the managing director. However, very often in several businesses, largely family-run, the line between the managing director and the CEO becomes very thin. We have seen people having the designation of MD and CEO. We have seen organizations where the family-run businesses are there, and the CEO position is adequately provided to the next to the heir. So all of these kind of things are blurring the conceptual line between the MD and the CEO, and this leads to its own governance issues and challenges. The other thing can be an extremely strong and an over-dominant CEO who overpowers the board by his sheer presence, and because of largely due to the performance. So the organization should be one, if it the way the classical joint stock company is designed and the way it's supposed to function. In case the divide between the ownership and the organizational issues is maintained and runs fine, then there will be no governance issues and no there's a fair evaluation of the CEO. The MD works with the board, which then works with the shareholders. There is no twisting and turning of things. But since this is largely very often in cases of Enron and others, we have seen that this doesn't happen. Therefore, there is an issue which the organization faces very often. Now, the joint stock company, over the years, it is over 3 centuries that this concept has stood ground, and it is perhaps one of the fundamentals behind the growth of organizations and the growth of the business world itself.